30,000 is around about the number they're talking about. 232 is the actual smart expectation from Reuters, 230 from Bloomberg, and 240 from Action Economics, the people we supply some information for. See how this. We are sort of giving myself an echo there. So I hope you're all well. It comes around really quickly. Obviously, it's Good Friday in many parts of the world as well today. So quieter markets are expected. We've got very, very low volumes, very, very thin markets. Europe's closed completely. The futures market is open a wee bit. The Forex market will react to obviously the numbers that are coming out. If I just share the calendar with you. There we go. Just share the calendar. You can see the numbers that are expected here. Let me just share my calendar. Move me down. And there's the calendar. So just quickly run through the numbers. We've still got about 5 minutes or so before we go. Catalgo, hello, my friend. Hope you're well. Good afternoon. Hope you're well. Enjoying your Good Friday. If you're trading today, be very, very careful today. Obviously, the volumes are low. The spreads are a bit wider than normal, given there's less liquidity in the market. So, you don't always have to trade this thing, but it can be quite a mover. So key numbers to look at. Obviously, the headline number here on our calendar is at 240. 230, I says, is Bloomberg and Reuters expectations. Average hourly earnings on an annualized basis expected to fall to 4.3% from 4.6%. Last time. Unemployment, the key unemployment rate, 3.6% is really very much full employment. So that may be starting to spike up. Remember, we've had some really, really weak data this week, the PMI data. And PMI data, remember, is forward-looking. So it's a leading indicator. Particularly weak, the manufacturing. The services number was also particularly weak. But that new orders number within the ISM number was particularly, I'm going to say it again, particularly weak, excuse me. So the monthly earnings expected to tick up a wee bit, but we'll see, 0.3 of 1%. And participation rate, the key participation rate, 62.4 from 62.5. So all that argument about people coming back or not coming back. So still a few minutes to go. Let's just have a look at what's going on. I'll bring that back up in a minute. As you might expect, not a great deal of action. The euro here sliding sideways around the 109.10, but still holding that 109 level. So if we briefly look at the daily chart, you can see euro still very much bid against the dollar. We came to a top this week at 109.70 zone. We tried it again yesterday. Let's zoom it up a bit. You can't see that very well. 109.70 yesterday. So a bit of a tweezer top there. We'll see how we go on today. Obviously, I'd say be careful how this goes today. Obviously, it can be quite a mover on Good Friday, although it can not be as well. Last time was 2021, I think. We had non-farm payrolls on Good Friday, and that time we had a big. I noticed it earlier in the week. Yeah, it was a big beat. It came in at 900,000 compared to 600,000. But the movement in the euro, for instance, was only about 20 or 30 pips, I think, that day. 37 pips, I've made a note here. Yeah. Time before that, it was 2015. It happened on a Good Friday. It was a reverse. We had a big miss. It came in 156,000 when market was expecting 240,000. So let's see what that number looks like later on. What have I done with my? There we are. Let's leave the calendar on. As the number, actually, let's put the charts back. So dollars, yeah. I mean, most of these positions are sliding sideways. So euros sideways, yen, dollar yen here, 131.70. Can't get over 132 for the last 3 or 4 days. Big shakeout here earlier in the week. Didn't want to go under 131 either. So relatively big range there for dollar yen, but we've trended higher yesterday. Capped at 132 today and sort of pivoting around to the upper half of that, 131.71 at the moment. Sterling's had a really good run, very positive. This is early in the week where we went over 125. 125, my friends, is a big psychological level for sterling traders. The green line, trend line here, is the daily trend line from that low back in at the beginning of March. So you can see, it's trended and ran really, really strong from 118 all the way here to 125. So it's a huge move for sterling. And intraday today we're down to test that at the moment. So 125, big line in the sand. We've been declining for 2 days. 124.25, we've breached this daily line, so we may see some support around this if it's not going to move back down to the 124 level. Natalie, good afternoon. Sorry, not Natalie. Nate. Good afternoon, Forex Knights. Good afternoon to Alex. Hello there. And Philbert, good afternoon to you as well. So welcome everyone. So that's sterling, Australian dollar, CAD dollar, and so let's gold market is closed. We did test the key 2000 level yesterday in relatively thin trading again, and we're at 207 to close out the week. Got no gold futures here. Stocks are actually open as well. The futures market is open. But again, this is the USA 500. Again, sliding sideways, 4125. And the NASDAQ, I know a lot of you trade the NASDAQ. Where's my NASDAQ gone? NASDAQ futures, USA futures. Also sliding sideways, you can see there on very low volumes at 13,165. So let's just see if the data's come through. Not just yet, indeed it has. It's just rippled through. So we have more or less in line with expectations. Nothing to get too excited about. I wouldn't have thought out of that lot. So 236. It's 4,000 above the Reuters estimate, and it's 6,000 above the Bloomberg poll. So nothing really to get too excited about. Previous month has been upgraded from 311,000 to 326. Unemployment has slipped again to 3.5, so it's a really, really tight jobs market. It's 62.60 for participation rates, those people coming back. But that's also suggesting that may sort of it's biased really for a stronger dollar. The wider a U6 measure of unemployment, U6 it's takes in a broader range than the headline 3.5%. That's at 6.7%. But again, it's going in the right direction, coming down. It depends how you're arguing whether the right direction or the wrong direction as far as the Fed are concerned. So a bit of movement here on the futures market. We still really haven't moved out of that range, have we? Show you the 5-minute chart. The Nasdaq responded. The 13,185, 13,125 is the range. It moved in that 5 minutes of the news coming out. So it's biased really to the upside a tad. The euro going the other way. So it's a dollar positive, as we said. Number that's come out. This is the sort of immediate response here. 2 minutes after the numbers come out. So 109.95, 109.90. So we're slipping down. So positive. Yen going in the opposite direction, I would guess. There we go. Back over that 132 we just mentioned. So it's a dollar positive non-farm payroll. As I said, the numbers headline more or less in line with expectations. So it's a bit of an odd one, given that the dollar's been weakening recently. But average earnings, 4.2%. That slipped as well. Unemployment's better. Participation rates better as well. So it's really nothing that's going to really change the direction of the Fed. There's nothing shaking that up. Remember, the data this week has been particularly weak, so it's probably airing back, possibly. Again, it's a very close call. Whether the Fed have sort of talked themselves into let me just bring myself up, that they were going to move another 25 basis points in May, and that data there today doesn't really change that ticker particularly. So I think we might be edging back to that 25 points again. But again, we were over 50-60% at one point of a no change. So we'll see how the markets react to it. But initially, it's a stronger dollar on that number coming out there. So US dollar yen over 132. Sterling would have retracted further from the key 125 level, and indeed they've tested 124. And euro, that's a bit silly, isn't it? Not 5 minute one. Euro back here, back under the key 109. So 109 euros has broken. Salman, good afternoon. So anything you guys are interested in trading today, stick it in the box. We'll do some analysis on it. I say payrolls relatively positive, in line with expectations, more or less, and so airing on the strong side at 236 for the headline. Unemployment 3.5% and participation rate up. Earnings also there we are. Earnings sort of in line with expectations, 0.31% for the month, and 4.2% for the annualized number. So slipping a tad, but still, people showing a very tight jobs market still. But it's too early to say that's a first sign of any weakness. We did have, obviously, we had a big miss for ADP. We had a big miss for the JOLTS number earlier in the week, but non-farm payroll has held up, basically. So it's bang in line. I say last time we had a non-farm payroll, it was in line, and it was also on on Good Friday. Was back in 2012, I think. Let me just check that. 2012. Yeah, 2012 was more or less in line. And again, a very, very small range. We had a 30 pip move for the euro and about 130 pip move on the day, that is, for the yen. So in line payroll. So guys, let's have a look. Anybody want to have a look at the markets? What time frame we want to have a look at the markets? George is asking first. George is asking about the dollar, Aussie dollar, NFP. So you're looking at Aussie dollar, and somebody else is asking about the Aussie CAD. So let me just get the chart back. Let me get rid of me. There we are. There's a chart. So George is asking about the Aussie dollar. So Aussie dollar here. Let's zoom this up. So this is the hourly chart from this big peak up here at the beginning of the month, earlier this week. We're at .68. Couldn't quite get to .68. Sorry, .68. We're at 67.80. Is where we've sort of topped out the close of the third, the beginning of the fourth, and we've been looping down ever since, haven't we? The highs have got lower and the lows have got lower, and we've lower again now under that .66 level, .6666 or 6666. Bear with me on that one. 66.45 at the moment, so 66.33 is the next thick line I've got here. And where's that come from? Well, that takes us all the way back here to March 27th. So Aussie weakening like many of the dollar pairs. It's a strong, or it's been deemed a strong for the dollar, given the movement against the dollar we've had all week. So dollar's coming back a wee bit. But remember, my friends, remember, it's very, very low volumes as well today. But certainly that move that's happened from earlier in the week here. This is Tuesday, Wednesday, Thursday, Friday. So the top Tuesday, Monday night, Tuesday morning has continued to unwind. So the trend is just with you. So that 20-hour moving average, 21-hour moving average, this magenta line has really kept you the right side of that line. So that's moving lower. 66.33 is that next key line for me, which here, George, takes us to this. Where are we? 66.33. Takes all the way, as I said earlier, it takes all the way back to 27th of March. So big down candle at the moment. But again, that could be exaggerated. For me, that's a bit of an exaggerated move, given the data is more or less in line. But it looks like the chances of a 25 basis point hike now might have increased a wee bit on that data. There's some other news. No, it's nothing particularly new on that. George, I don't know what time frame you're trading it, but if you want some more detail on a different time frame, please let me know. So if we go to the daily for the Kiwi, you can the Aussie, you can see the hourly chart is very much in line. As we said, this moved down from Tuesday, very much in line with the daily trend. So you're with the trend taking an hourly trade, having shook out the big positive up candle on Monday. That's 67.88. Sorry, 67.80, and it's been trending lower ever since. End of day traders, if they wanted to take it into the Easter weekend, would have gone short yesterday. I don't think many would have taken that, but you see, there's our 66.33 on an end of day basis. Then it's 6.66 round number, and then these lows for March for the Aussie and on an end of day basis, we're there at 65.70. So that's the target to the downside, George, if that's going to continue to unwind. Let's go back to the hourly chart. I'll default to the hourly chart unless you ask for a particular time frame, guys. The Bang, good afternoon. Hope you're well. Hope you're enjoying your Good Friday. Aussie CAD. Have I got Aussie CAD here? I don't know if I have Aussie. I think Aussie CAD, CAD Yen, Aussie CAD. There it is. Aussie CAD daily. This is just a different setup for the Bang. Don't worry about it. This is the triple exponential moving average. So it's a TEMA setup. So I've got a TEMA. It's the red line. That's set up at 14. And then I've got the blue line here, two moving averages again. This is the AMA, the adaptive moving average. You want to know how to trade this particular setup? Watch our webinar on trend following webinars where we look at the adaptive moving average, the AMA, and the red line here is the TEMA. Two very simple moving averages with the triple EMA just combined, does what it says basically. So Aussie CAD here on an end of day basis on this strategy has been short from the beginning of February. And thanks very much. Nothing big move down, higher, lower lows, lower highs, bit of a retrace into our flat going, and that's how to trade this one. The flat moving AMA there, nice little moving average. I like this strategy. I like this setup. Couldn't break it. Had a poke over it, didn't we here? But it was only for a day. Sorry, it was moving up for a week or so, and then it had a go over it. Couldn't hold it. Another long wicks suggesting exhaustion, and then we've moved down quite significantly. Quite a strong day to begin April, but look at that again, 3/4 day lower, a bit like the Aussie we just looked at for George Thabang. That's moving lower again. So on an end of day basis, we've breached .91, and we're also under .80 to .90 today as well. Let me just put those. Sorry. Make it yellow so you can see it. Sorry, on this dark background, and that should be there's .90 we've gone under today. Next time I come back so I can see this. There's that 90, so close. So we breached that, or was closed on it yesterday, and we're under it now, .90. So that's a key level. So next, as far as an end of day basis is concerned, the trend is very much with us to the downside, so we're very much on side. So where's the next level now that we've breached 90? Well, 90 was a key target level from this breach here. You can see it's an area of resistance here to this move up here. It didn't play out. It was sort of ignored as we rotated through it here. It was more the 91 level was more of a key level, and then it's declined, rally, and now trending lower. So 90 is key. See where it closes today. As far as the MACD is concerned, we started to move lower. The MACD signal line's tipped lower again here. You can see that there. And the ATR is sort of a bit sideways as it's going down, but it's sort of tipped up. So, that trade is very much to the downside. But now it's reached 90. Interesting to see where it closes over the next couple of days. I don't know how long what time frame you're trading this, the Bang, but certainly the daily is down. The 4 hour will be negative as well on this set. You see a bit more volatile. Didn't want to go up. See how flat See the flatness of the AMA. That's key. It's not trending, so it's flat and then down, and it's been going down since, hasn't it? So last big here on the 4 hour strategy would have taken you short back here, having tried to move up here, and it's failed. Now it's gone down, but the trend was down, wasn't it? So you're against that uptick here was very much against the trend. It was the last breach of 91. And then we've moved down significantly on that bar. And then another big bar yesterday took us under .90. And now we're back under .90 again. See how it's retracing, it's moved back down. So 4 hour remains negative, and the 1 hour will also be relatively negative on these. And that's obviously the big non-farm payroll number there moving down. CAD had some good numbers yesterday, good Aussie CAD numbers yesterday. So that's answered your question. Sibusi, yen, we just had a look at yen a minute ago, didn't we? Go back to my default chart, which is this one here. This is a standard crossing moving averages. The blue line is the 50 period moving average. 21 moving average is the magenta line. 9 and 5 are the two other moving averages here we're looking at cross. So again, guys, remember it's a very thin market, so be careful. But this has been ticking higher from this test Thursday and Wednesday under the 131 area, and now we've breached 132 today. So we ticked higher yesterday, and big positive, or initially positive, 45 minutes after the date, or 15 minutes after the data. We're over 132. We're over that 200-hour moving average currently, but obviously this candle isn't closed. But if we got the daily time frame, you can see the big move down against the dollar yen as it's moved down under this 131 towards the end of March. We retraced a wee bit, and then we've been back down again to retest the 131. But look at these two candles. If this is the low, they're higher than this 3 or 4 candles down here. So those lows, you could say maybe getting high, but really it's in a consolidation phase between 131 and 133 on a end of day basis, dollar yen. So you'd like to see it certainly break the 20-day moving average there at 132.45, and then tougher resistance at 133, because that's the 50-day moving average as well as 133 itself to the upside. But relatively positive today. Remember, Mr. Kuroda has his final press conference tomorrow. So he's saying goodbye to the Bank of Japan, and the new guy, Mr. Uda, will take full reins from next week. So no sudden changes are expected. That isn't how things happen in Japan. But he might want to make his own stamp on the Bank of Japan, Mr. Ueda. But there's no strong sign of that currently. So. Dollar so far on that data has ticked to the upside, Sibozo. Dollar yen. So that's the upside on that hourly time frame. Salman, it's a bit of a fundamental question. This: if China, Russia, India, along with a handful of other countries announcing they will utilize their currency for trade, what do you expect for the dollar? It's been talked about before, Salman. They are doing it for some commodities, but really the sudden implosion of the dollar, or the collapse of the dollar, or the whatever it is of the dollar, it's still the world's number one currency by a long, long time. And this, certainly in my lifetime, and probably in all our lifetimes, it still will be the number one global currency. Obviously, there's obviously huge political factors there. Can the Russians and the Chinese still take it forward, get along? There's not a lot in it for China, to be honest. They're, the world's second largest economy. Russia, yes, has a lot of commodities, but, it's still a medium-sized economy. Awful lot of Chinese people to be fed and watered, and, economy to grow. So it needs to grow quite quickly. And then India is in a similar situation. Huge population, growing very, very quickly. But lots and lots of pockets of poverty as well, and extreme wealth in those developing countries as well. So we'll see how it goes. Again, politics can change, people in charge can change, but dollar remains strong. The demise of the dollar has been talked about many, many times, Salman. So I can't tell you what to do, but don't put all your eggs in one basket betting against the dollar. Just trade what you see, trade what the charts are seeing that affects you. These sort of big questions, Salman. Yes, they're big fundamental issues, but can you make any money out of it? The volatility on an intraday basis is enough for most retail traders, or too much for most retail traders. So if the big downtrend in the dollar is going to continue, well, just make sure you're on the right side of it as it's going down. And that's sort of what's happened. It's been a very choppy, if we go to the weekly chart, you can see it's been a very choppy first quarter. But, for 2022, it was a huge rally, wasn't it? So, we're still over 100. 100 on a dollar index, Salman, is a very strong dollar still. This is dotted line here is the beginning of 2023. So we had a weak January, a strong February, and we've had a week. This is 6th consecutive week lower, isn't it? 1, 2, 3, 4, 5. Yeah, 6th consecutive week lower for dollar index. But it's done is sort of it's a little bit lower than it was when it started the year, which was big down from the big. But we have let's keep it in perspective. We've had a huge rally for 2022. So it's all in relative terms, Salman. Don't get too uptight about things that you can't control. They will do what they will do. The politics. Can you tell me a little about the dollar yen, Alex? We've just done the dollar yen. Let's just do it again. Your questions on. It's been here on the date. Whoops. It's weakened quite significantly during March. Again, another one that had a strong February and a weak March. It's the dollar pair that way around. As far as the start of February is concerned, we bounced a wee bit towards the end of March, but we've been down for 3 days and we're up for 2 days. So going forward, Alex, as I said earlier, we want to break over that 21 EMA at 132.45 and then 133. 131's our big support zone. But interestingly, so far in April, that the low has been higher than the low for March. So that's relatively positive. It's a bit early to say or how that's going to pan out. But technically, it's sort of consolidating. It's under its 20-day moving average. It's under a 50-day moving average. So the key levels, those two levels I've just mentioned, and that 133 is where the 50-day moving average is on an end-of-day basis. Intraday, Intraday, it's reacted positively and very low volumes and very thin markets with no major banks open on the non-farm payroll data. Okay, Filbert, dollar CAD, NFP, dollar CAD. The Canadians announced their jobs data yesterday. That was quite much better than expected. It's been in a big old downtrend. There's another one. That's the daily for dollar CAD. Filbert, which I'm sure you're aware of. So big move down. We've had a 3-day consecutive bounce from this 134 level. And we're also up again today and over the key 135. 135, big round number again. 5s and 0s, people liking. You can see that blue line there. That's the 135 level. And you can see we were under that for most of January, most of February. We broke over it and rallying up. So we're getting back in the saddle a wee bit, but it's still negative. If I zoom that in a wee bit, you can see it's nice, strong move down to 134. It's again a nice bounce back as well, but it's way under its 21 period moving average. It needs to get to 135.70 is the next target to the upside. 136, and if that breaks, we then run back to this level at 137. We went to 138, didn't like it. It was too high. Buying crescendo up here, and down we came. So they're the key. You can see that. Hopefully you can see that. There's next target 135.70, 136, and then 137 itself to the upside. If this is going to give some momentum, but first, obviously, we need to break and hold this 135 level today. So we've had a nice move down. Thank you very much. Looks like that's coming to an end. Again, if you've been trailing your stop loss down, you might have been stopped out in the last couple of days. If you're trading this, waiting for the break of that mid-moving average, you're still in it. But interestingly, the rising 200-day moving average is going to sit at that 134 level, providing more support. And then as you can see, if you look to the left again, you can see this test down here to 133 was a weak one. It bounced off it quite significantly. So certainly some buyers down there. 134, a bit more of a pivot, a bit more like a rotation level for about a month or so. So it's held so far. We're in a consecutive fourth day higher. So it's looking relatively positive. The 4 hour will be positive. There's 4 hour ticking over its 21 EMA earlier and moving up over that 135 level. And the 1 hour time frame, again, that's been tracking high as we've just seen for 4 days. And interestingly, the 1 hour is right into its 200 period EMA as well now. So a bit of resistance here at 135.12 level. So we'd like to see that broke, but it's still, it's been positive from yesterday. It's been positive all day today. So dollar positive against the CAD, moving to the upside. Okay. John, Euro CAD on 1 day and H1. Euro CAD, we just had a look at Euro CAD. Did we have a look at Euro CAD? We didn't, did we? It was something else. Euro CAD. Have I got Euro CAD here? Euro dollar. Got some my Euro charts. Sorry. John, just bear with me a minute. So, Euro CAD. What have I got here? Where's Euro CAD? Yeah. Euro CAD, again, another one biased very much to the upside. There's that 21 exponential moving average. It's kept us in the right side of that trade for flat here during February. Kept us buoyant for March, and it's sort of held and it's broken, but we're back in it. So it's a key support area at the moment. So it's looking right. So 146.30 is a key low area here from that big down candle. Sorry, big up candle. So 146.30. The 20 EMA sits at 146.80. 146.80. So 146.30, 146.80. And we're just edging higher now. That was a bit of a weak cross yesterday. So really, you can see the clusters of the wicks of the candles sitting there at 147.60. So what we'd like to see there is the body of the candles breaking above this line here, 147.60. 147.60. We'd like to see a full-bodied candle close above that line there. See how the wicks are coming into play here? Intraday stuff. The last big close was around about there, 147.60. So that we want to, big chub of that before it's going up. So it's sort of biased to the upside so far this week, having moved lower into this 146.30 into the end of March. So a slight bias to the upside on the 1 hour. The signal line here has rolled over and still turning down here on the MACD. The histogram is fairly weak, so it's really much of a consolidated area. It's consolidation. So if your support zone, immediate support zone is there, is at that 146.75 and then 146.30. Zoom that up a bit there, and we look at the 4 hour. So that's the daily. It's sort of consolidating, as you can see a bit more, see a bit clearer on that one there. So that's the level we need to break up to go to the eye. So it is biased to the upside a tad. But as far as your 4 hour time frame, John, is concerned, it's been quite choppy. It's been moving lower here. It's not. It's from a trend following analysis, it's very undirectional. It's not one I'd want to get involved in, because look how flat how small the histogram is, and the signal line is sort of literally waving through the zero line. RSI at 54 is neutral, not happening, so it's not something I get too excited about on a 4 hour. That might have got you back in, but it looked like that was going down. That would have stopped you out, and you reversed there. So you're biased a little bit to the upside. But again, the key level to get excited about is this break you would need to do round about, as I said earlier, that this candle here, which sort of coincides the last big closing day there, that 147.60. I'd like to see that, if that's going to move forward, John, my friend. And Kuza, hello. I hope to see you I hope you see the team in Sandon at the Expo. Gold is closed today, and it closed at 2007. The only thing I'll say about gold today is what's my overview default? We did go back to test the 2000 level yesterday on gold, so gold's not available to trade today. So there's that closing. So it's been sort of having spiked to the 2030 level on earlier in the week. It didn't really want to hold it, and it's been sort of leaping. It's lumped down on Wednesday into close, having had this big lift here. So there's a key 2000 level. It was tested, it bounced off it. So we ended up sort of eking lower. If if gold was available now, the stronger dollar would have probably pushed that to test that 2,000 level again. And Cumsy, hope you're well. You got my message on Skype. I see Aussie buy after the current non-farm payment. What do you think? Says George. Aussie, depending on your time frame, George, you're saying it's a buy. It's been all the way down here in the immediate effect. There on it's not doing anything. And as I say, be careful trading on when markets, the big banks are closed, which they are. But the bias is still to the downside. This is the 1 hour chart. You might have caught the bottom, but no, that's still eking lower. That's the 30-minute, the 15-minute. You see the move down, then move back up. So the immediate bid on the dollar ran out here against the Australian dollar, immediately cancelling each other out. But again, that might be just people playing with you, moving it lower, see what happened, and then moving it back up. But I don't know. I wouldn't be looking at that. That's very sort of still biased to the downside, even on that 5-minute time frame. So yeah, it's not a great deal. I could comment further on that. .6660 we went under. Say look at the daily time frame. Big lift on Monday, Tuesday, Wednesday, Thursday. Big down, relatively significant down days, and we're just sort of pivoting at that level now. So 66.33, 66.66, two key levels. Break of .67, that would take it higher. Under here, the bias still remains a bit to the downside, but as you can see here, very much in sort of a consolidated zone. So watch those three lines there with the big bottom there at .66. George, my friend. 1 hour chart, pound CAD. Where do you expect the said pair is heading? Do you expect further downward move? Do you expect 167.27.90 will be triggered? Salman, let's have a look at the pound against the CAD. Pound's been very strong this week, certainly against the dollar and against the euro, and also against the yen. Actually, it's been a strong move for the pound. There's the euro I'm talking about, and you were looking at 1 hour on the pound CAD. Let's have a look. Pound CAD 1 hour time frame. Well, that's not doing anything. Again, another one I wouldn't be interested in, George, to be honest. It's not, Salman. It's not trending. I'm a trend following trade. I want these sort of things. I want the moving averages to be in a direction, either moving down like we had here, up like we had here. Nice big move down there. Nothing going on there. Up. And then it's not done anything. They're flat. So I'm out of that. I'm not interested in that. It's sideways. Look at that. That's just it's range bound. It's not trading. But let me answer your question. 167.27. So look, let's put that in there. I don't know why that is. Put it in for you. You said let's make it 167.20, 167.27.9, on the 1 hour time frame. 16279, 16279. 79. Right, there we are. Will that be triggered? Well, maybe, but it doesn't look like it, doesn't it? Breached it quite significantly from another consolidation. Let's zoom that in. Big candle, positive candle here earlier in the week. Rallied to where was the top? Top actually came in the following day and went as high as 168.35. But really, from an end of hour point of view, the candle top was around over there at 168.21 or 22, and it hasn't got there. Didn't get there yesterday. Hasn't got there yet today. That looks like still a bit of a step away. The initial reaction in the last hour, which included non-farm pair. Remember, pound and CAD are not directly impacted by obviously US jobs, but it was to the downside. It was negative. It was a big negative candle relative. But again, remember, it's a quiet day. RSI is weakening, I suppose, at 42. But again, look, nothing from a direction point of view. Look how flat the MACD as yesterday after. So again, I'd hang on to my capital, to be honest. Salman, that's not doing anything for me. The low was a bit higher than that. 160 so far has been 167.54. Really is where people started buying on Wednesday, Thursday, and again today. So we did spike through it a wee bit, but there might be some buy orders down here. Possibly has, as it's bounced off there. So, but certainly a 167.27.9 looks a bit of a step away. I mean, it's possible, obviously, but that would then trigger it on this time frame that it was going to move down. So that's sideways on the 1 hour. So what's the higher time frame saying? The 4 hour will be probably quite similar. From a choppiness point of view, a bit more exaggerated down. That's that rally up, but there's your. See, even on the 4 hour time frame, it's a long way away. We haven't been there on the 4 hour time frame. The daily time frame is a wee bit different. There's your 67.20, but it's sort of halfway of that big candle from earlier in the week. So there you go. That's the daily, but the support is there, so it's still biased to the upside. That at 166.80. So we've got to get to that area first, but doesn't look like it at the moment. But who knows what might happen but not in your 1 hour time frame. You see, it's it's a bit of a leg down, isn't it? Anything, given that there's no more, the future, even the futures markets are going to be closing. The Treasury markets will be closing US as well. So there's not a lot going to happen from now on in for the rest of the day, Salman. So take care myself. So bang. Thank you. Hopefully you are blessed Good Friday as well. We can look at the pound yen as well, seeing some bulls on my end, says Star Bang. The guppy. It's been, as I say, it's been a strong certainly end of March. It's been on a bit of a run, pound yen, from this test at 160.00. See how the big number played out. We were tripping down. Failed again. I remember missing this one because it sort of just hit that, but followed through quite aggressively here on the 29th of March as it broke 163.36, and then we spiked through 165 and even 166 on Monday. Very interesting volatile Monday, but that's a big rejection of both 165. Well, certainly a big rejection of 166 and even 165, which is now done it once, twice, 3 times. So here, the first time was the end of February, did it again at the end of March, and it's done it again here at the end or at the beginning of April. But we're still biased to the upside, this pair on the daily time frame. 162.50 is the support zone. The 21 EMA sits a little bit above that, 162.84. So it's still sort of biased to the upside, but a break and hold. More importantly, a break and hold on an end of day basis over 165 is what's key to take that to the upside. So seeing some bulls on your end. Well, certainly yesterday and today, 4 hour. There's that 163.36 there, the blue line there, and there's our 162.50. Again, that's sort of edging high, but you see the clear rejection of the 165, 166 there on the 4 hour time frame. RSI 52, very neutral. And on an we did end of day, didn't we? And on an hourly basis, there's a slip down from earlier in the week. It's 166, 165. Lower here on Wednesday under our 163.36. So I don't know where that's come from, but it's certainly there. What that is for? Let me try that. 163, so very clear. It's not numbered, so it's usually not as significant. That probably should come out. But and again, there you can see that sideways. Actually, I wouldn't get too carried on that one, my friend. Tabang, you're talking about 4 hour and daily and 4 hour for this one. Okay, 4 hour. So 4 hour is sort of dripped down into this 163.36 and tailed off it, but there's no follow through. The moving average is still flat. The candles, as you can see, are very small because of the lack of volume, the lack of participants over the last couple of days. So again, I wouldn't get too excited about that. But it could easily, I'm sure, as you know, if you trade the pound yen, could easily turn around very, very quickly. But let's go back to the daily. So the daily remains relatively big. So the pound is better than the yen in this pair at the moment. But we've had a strong, quick rally, as I said earlier, at 165, 166, which is given up. So, big line in the sand is that intraday is at 163.36, but on an end of day basis, I said earlier, 162.85 and 162.50. Okay, that's answered your question. Good evening, Mr. Entertainment Connect. Anything you want to have a look at, my friend? No? Yes? No? Salmon, that's not a problem. Bibuso, not a problem. So there's no more question. Let me just run through the news again. Those of you who might be just joining us. Non-farm payroll today came in more or less in line with expectations, and if anything, sort of biased to the upside. So we had a big, or not big, but we had a move for the dollar, which may have cooled. We'll see how it closes today. Why is our Jordan dinar strong? Why our Jordanian dinar is strong? I don't know, Salman. I don't really look at the Jordanian dinar. Some emerging currencies may be benefiting from the weaker dollar. There may be some movements there that I don't know. I haven't got that pair and I can't see it, I'm afraid, Salman. But as far as the data is concerned, basically, although it's red here, this calendar had it at 240, many had it around 230, so it came in more or less in line with expectations, a little bit better, a few thousand jobs. There was again another little bit better revision, but again it's to the upside. So again, it's suggesting a very tight jobs market in the US. Counter to that was the average hourly earnings have sort of slipped. Sorry, the monthly ones have stayed with expectations. So they've ticked up again, haven't slipped the previous month. They were up the previous month before that, the January. But the annualized has come down relatively significantly. So the Fed will be quite happy with that at 4.2%. So still relatively strong. And unemployment ticked lower again as well, 3.5%. So it's getting even. That says it's getting even tighter. So that helped. The initial reaction was obviously to help the dollar because the dollar's been down over a few days on expectations that they would end up having to pause. The data this week before non-farm payroll has always been weak. The ADP missed. JOLTS showed openings not being filled for 500,000 less at just under 10 million, wasn't it? The more important, or just as important, PMIs, the forward-looking PMIs, both the manufacturing and the services were weak, and particularly the services job openings was also weak. New orders, I should say, not job openings, on the ISM services number. So hence all that mixed stuff. There we go. Oh, some it's fixed. All right, yes. A lot of currencies are pegged to the dollar. It's 141. So that's the rate that the government in Jordan have decided to peg their currency to the US dollar. Again, that's one of the reasons many people, that's why it's you can do that with something like the dollar because it is the world's number one currency. It is freely available everywhere. People want the dollar. There's obviously liquidity issues, and you haven't got that with the Chinese renminbi and certainly the Russian ruble and stuff. So don't get too carried away with things that you can't control, as I said to you earlier, Salman, my friend. So Jordanian dinar, I don't know, is a short answer. Just actually to bring the calendar back. So next week is obviously quite a busy week as well. Some key things happening next week. Top of the shop. We've still got central banks announced. We've got the Canadian central bank, but before that, we got inflation. Inflation out of the US is one of the key data points next week. Next Wednesday, the 12th. But before that, we have the Chinese inflation data on Tuesday, and retail sales out of the euro area. Probably the key data point is the CPI from the US, and that's ahead of the bank statement. And remember, the Bank of Canada have already indicated their pausing of their rate hike cycle. They were first to start cutting their QE as the stimulus as well. They've actually started pausing, and then we've also got not to be perhaps not Signum as they used to be, but there's certainly at the moment I should say. Let me correct myself. But we've got the FOMC minutes also on Wednesday. So Wednesday, the 12th next week is the key day for traders next week. We've got the Bank of Canada, the key CPI data from the US, and then the FOMC minutes later on in the day. Things cool down a bit later in the week. Jobs from Australia, CPI from Germany, some manufacturing and production data out of the UK. I think we've got monthly GDP as well. Yeah, monthly GDP, I thought it was from the UK. But again, it's backward looking. It's back from February, so it's not something to get too overexcited about. And then obviously weekly claims on Thursday as well. Yesterday, again, showing a tick up when we went up to that 240,000 for... 230,000 for the weekly claims next week. So big week next week. Bank of Canada, US inflation, top of the shop. FOMC minutes to back it all up. And inflation from Germany and China as well. So always something going on. So I'll just leave you with the headline from today. 236,000 new jobs on the non-farm payrolls for March. Unemployment has fallen to 3.5%. Participation rate has ticked up again, and earnings up to down to 4.2%, but still relatively strong. So that's a relatively positive for the US economy, and relatively. Let me leave you with the euro. Relatively strong for the dollar on this Good Friday, where it's thin volume. So let me know where's the euro back. So that's the Aussie, not the euro. That's the euro. So initially dipped. It's come back a wee bit into this 108.70. So it's back at the 109 level, the euro. So down for the day, but off its lows after the initial data has been absorbed. So again, there's going to be very much a decision to be made by the Fed on whether they go with their 25 basis points. So obviously there's more data to come, or see what the Fed funds futures say next week on that with regard to whether they're going to pause, join the Bank of Canada or and the RBA. And again, we had that surprise this week, didn't we, from New Zealand, 50 basis points when the market was only expecting 25 basis points. So are they going to finalise their hike cycle to 25 basis points? Inflation is still very, very high. So see what that CPI data looks like on Tuesday. So if there's no more requests, guys and ladies, I'll let you go to enjoy your Friday. Enjoy your Good Friday if you're celebrating. If you're in the middle of a Ramadan, it's third weekend, isn't it? So I saw the full moon last night. So stay safe, everyone. Enjoy your weekend, and we'll see you all again on Monday. So all the best. Take care and stay safe. Bye-bye.